Welcome back. Still tuned into Midcap Radar on CNBC TV 18. MTAR Technologies posted a very strong set of Q3 numbers. Revenues up 105% and profits also up 140%. Srinivas Reddy, the MD at the company, is joining us now to discuss the outlook going forward and analyze Q3 numbers as well with us. Mr. Reddy, good afternoon. Thank you so much for joining us. It has been a good quarter and you had guided for a growth of around 55 to 60% in FY23. At the 9-month mark, you've already done 69%. Will you actually raise your guidance on the back of this? And margins at 9-month mark at around 27%. So how will you be able to achieve that 30% margin guidance that you've given for FY23?
Well, at this time, we have more clarity in terms of our guidance, which we were given at the beginning of the year. We are looking at this time, about 80 to 85% revenue growth for this year, close to about 575 to 600 crores of revenues. And the margins would be at around 29% plus minus 50 basis points.
Okay, so you're raising your revenue guidance from 55 to 60% to 80 to 85%, but you're bringing down your margin guidance from approximately 30% plus minus a few basis points to now 29%, right? Revenue guidance up, margin guidance brought lower. Can you talk about your net working days? Your net working capital days have gone up this quarter. Your guidance was to bring it down. What is the roadmap on the net working capital days?
Now, technically, the number of working capital days has come down. There was an issue of 38 crores of receivables, which supposed to come in by end of the month in December because of Christmas and New Year. It came just at the beginning of Jan. So we didn't, that has taken it slightly higher. Otherwise, it is lower than the previous quarter at 245 days or whatever. So we're trying to bring it down to 220 days by end of the financial year.
By end of the financial year, it will be around 220 days. Can you talk to us about your new orders? You spoke about 140 crore rupee order that you received in Q4, that is on Feb 7th. What is the order pipeline looking like? You get a majority of your revenues from exports as well. And most of the companies that we speak to say that export orders are actually seeing weakness. What is the case for you and what will you end the year with as far as order book and order inflows are concerned?
So we said the orders, what we received, as I said, 140 crores, most of it is on the product division, which we have developed the ASP assemblies. We received an order for 100 crores for that. That's been a phenomenal thing. We were able to successfully implement it. And we said earlier that we would close with a 1,000 crore order book at the end of the year, but now we would be closing around 1,200 crores of closing order book by end of the year.
Mr. Reddy, can you talk a bit about what will pull up your margins in Q4? In the first 9 months, your EBITDA margins are 27.8%. If you have to achieve your full year guidance at the lower end, you still need margins of 28.5%. So what are you baking in to drive this improvement in Q4 margins?
See, first thing is our Q4 numbers are going to be much stronger than Q3, right? So that will obviously improve our margins better. And obviously, some of the dispatches in space and nuclear programs are going to happen in Q4. So we'll definitely catch up on that and achieve a 29% EBITDA level margins by the end of the year.
Okay, so Q4 is expected to be strong. You had sheet metal business orders around 140 crore rupees, and you said that this is something that will start contributing in FY23 as well. How much has the contribution been so far? And what is the other capex that you're looking at? Defense still 4% of the total order book. We're talking about this big defense opportunity. How much can you scale it up by?
See, first, the sheet metal, we have gone through all the qualification process. We have done around 25 crores and odd, I guess. And moving forward for next year, we'll be able to cross the 100 crore mark or more than that in the next financial year. In the current, the latest quarter, Q4 as well, we'll do sizable business in sheet metal. As far as the defense is concerned, we are working with the defense labs as of today, but we are moving towards becoming a defense prime moving forward over the next 1 quarter or so. We are awaiting for some clearances. Once that is done, then we'll see sizable revenues coming from defense over the next 1-2 years as well.
Mr. Reddy, we'll have to leave this conversation here, out of time. Thank you very much for joining in. Strong set of numbers coming in from MTAR Tech. The company raises the full year guidance on the top line. Margins will be slightly subdued compared to what they had earlier anticipated. But there will be a pickup in margins in Q4. Get into a break. We'll come back with more on the markets.